Everyone, welcome to Financial Fix episode 2. My name is Whitney. Today we're going to talk about how you're actually taxed and how to figure that out. This isn't a super exciting episode, but we have to go through this information in order for you to apply the information in future episodes. If you don't understand how you're taxed, you won't be able to understand how different things apply to you. Because how you're taxed is going to change the way that your entity treats certain transactions, certain things, if different tax strategies apply to you, how you do your bookkeeping, it determines so many different things. So without this information, you're just kind of sitting there unable to determine what you're supposed to do. So this sheet right here, I'm going to have a link in the description area. So you can download this, you can work through it yourself. You don't have to take notes or anything like that. This how you are taxed spreadsheet or worksheet is going to be looking at from a federal perspective. So from the IRS, how are you taxed? You may be taxed differently from a state or a local perspective, and this is just for federal. Okay, now oftentimes those state and those local taxes are determined based on how you're federally taxed, okay? So a lot of times I will have new clients come to me and I'll say, well, how are you taxed? And they'll say, I'm an LLC. That tells me zero information, okay? So an LLC can be taxed as a sole proprietorship, a partnership, an S corporation, or a C corporation, okay? LLCs are extremely flexible entities. It's going to, telling me that you're taxed as an LLC does not give me the information that I need to help you. So it is going to, though, provide a foundation for us to determine how you're taxed. And so first thing that we need to do is we need to determine what is your legal entity type. So you have formed a business. Maybe you actually haven't formed a business. You're just going out and you're doing various things. Like maybe you have a household cleaning business. So you're going through and you're providing cleaning services, and you haven't actually formed a legal entity from the state perspective. That's okay too, that's on here. So the first thing that we really need is information about what is your legal entity type. Most common that you're going to see is an LLC. Sometimes you'll have people that go and they'll form corporations at the state level. So they may have a corporation, they may have an LLC. So here I have 3 different options. I have no legal entity at all. So this would be that scenario like we talked about. Maybe you're cleaning houses and you don't have an LLC registered or any formal sort of designation. Maybe you have formed an LLC, or maybe you formed a corporation. Now, there's obviously other entity types, things like an LLP, that's going to fall in the same category as an LLC. You may have various different legal types, and it might not be listed on here. If that's the case, we'll just have to do a little bit of research to determine, well, how is that really taxed? So let's kind of go through most common scenarios we see with small business owners that are starting out is going to be either they have no legal entity or they formed an LLC, okay? This is all treated really kind of the same from a tax perspective on the federal side. So the next question that we have is how many owners does the business have? I can't tell you how your entity is taxed if you come in and you just tell me I don't have a legal entity or I have an LLC. That does not provide me enough information to tell you how you're taxed. I need to know how many owners does your business have. If it has 1 owner, then you are automatically taxed as a sole proprietorship. Okay, so if you have no legal entity or you formed an LLC, you're automatically taxed as a sole proprietorship. This is a disregarded entity from a federal tax perspective. You're going to file a Schedule C or Schedule F if you're a farmer, maybe a Schedule E if you have like a rental activity. Okay, so if you are no legal entity or an LLC and you have 1 owner, automatically taxed as a sole proprietorship. Now there's a catch here. You may have filed tax elections and that's going to change your treatment. Okay, so if you have filed a tax election on any of these, then that tax election, if it's been accepted by the IRS, is how you're going to be taxed. Okay, so if we're assuming that there's no tax elections and you have no legal entity or you have formed an LLC, there's 1 owner, you're automatically taxed as a sole proprietorship. Okay, now if you have no legal entity or you're an LLC, and you have two or more owners, you're going to be automatically taxed from a federal tax perspective as a partnership. Okay. Again, if you've made tax elections, this may be different. But if you have two or more owners, there's no legal entity or it's an LLC, you're automatically taxed as a partnership. There is one other catch here that I'm going to talk about really quickly. Actually, two other catches. You may have some sort of joint venture. If you have two or more owners, this is joint venture definition from a federal tax perspective is not very clear. So you may have two owners, like let's say I've invested in a real estate property and you've invested with me. That doesn't necessarily point to a business there, right? So that doesn't necessarily point that there's a business. That could be considered a joint venture instead. So you do have the potential for a joint venture. The other thing that you may have here is a qualified joint venture. Qualified joint ventures come into place if you have a married couple. They're the only people that own this particular business, okay? So you have a married couple and they either, if they have no legal entity, so there's no official registration in the state, there's two people that are married and they're the only owners of that business, you may qualify to have that business or that activity treated as a qualified joint venture. Not going to go too far into qualified joint ventures. Now, if you have an LLC and you have this two owners who are married, or the only owners in the LLC, if you're in a community property state, you may also qualify for qualified joint venture treatment. Not going to go into qualified joint ventures in depth because that's a whole separate topic. So, moral of the story is if you have no legal entity or you have an LLC, if you have one owner, automatically taxed as a sole proprietor. If you have two or more owners, you're automatically taxed as a partnership. There's a couple of exceptions in there. There's always going to be exceptions. Now, if you have a corporation, then you're automatically taxed as a C corporation. Okay. There's potential for tax elections there, just like there is with the other entity types. If you are a corporation, you are automatically taxed as a C corporation unless you file tax elections. Now, I just want to make a disclosure real quick. This is again for federal tax treatment only. State and local may vary. Okay. Oftentimes, state and local start with your federal tax treatment, so you still need to know. But I'm not going to go through all 50 states and all the various localities that are potentially in those states because that would take us all day. And then there are some instances where this chart may be incorrect. You may have some sort of weird, wonky scenario, or like maybe you're eligible for a qualified joint venture or something along those lines. So this doesn't take the place of legal or accounting advice. But one more time, you're going to want to know what is your legal entity type. Most common that we see in small businesses is an LLC. You may also see no legal entity. With these two options, we want to know how many owners does the business have. There's one owner, you're a sole proprietorship. There's two or more, you're a partnership. There's a couple of exceptions, mainly with married couples that own the business just together with no other partners. If you are a legal entity that is a corporation, so you formed a corporation in your state or in another state, you're automatically taxed as a C corporation, okay? And all of these can change with tax elections. So tax treatment is not necessarily always dictated by legal formation. You can make various elections and change things. You have to know this information in order to apply some things in future episodes. If you don't understand how you're taxed, some of the information isn't going to provide you, you're not going to be able to apply it. So make sure you understand how you are taxed. An LLC is not a tax type, at least on the federal level. It might be on your state. And so I will see you guys in the next episode.